Hello everybody and welcome to Greenstar Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's just gone 20 past 3 PM on Tuesday the 23rd of March 2021 and we're going to spend the next few minutes looking at Bitcoin. Now we're going to be looking at two counts for Bitcoin today. Both are roughly the same in the long term. One suggests we're still in a wave 4 correction of either intermediate or primary degree, and the other suggests that wave 4 correction is over and we're heading higher. My opinion over which I support has changed in the last week. I know some of that might irritate some people, saying you're flip-flopping, but the thing is, an open mind is a mind that can change. But before we get into all of that, we're going to start with our basic technical analysis as we always do, and then move into our Elliott wave analysis second. But first, a quick rundown of the chart in case you're new to the channel. So we have all of our numbers and letters here. This is our Elliott wave count. We're just going to clear that out of the way. We then have 4 exponential moving averages on the chart: 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side here with a built-in point of control, which is our yellow dashed line. We have an RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. We also have a MACD with a 10 for the short term moving average, a 20 for the long and a 9 to smooth. We are on the weekly time frame in log scale. Right then, what can we see here on the weekly time frame? Well, we're still above the 10, the 20, the 60, the 250 exponential moving averages. We seem to just be moving sideways for the last couple of weeks here. Pretty limited price range. We've come down from overbought conditions over the last few weeks, not quite into neutral territory, but away from overbought conditions. Some darker green bars of a histogram, a sign of bullish momentum dying off somewhat over the short term, starting to flatline with the shorter term moving average, not crossing over into a sell signal yet on the weekly time frame, but generally looking a little weaker. We have a pretty clear divergence between RSI and price. We have a high on the week of the 4th of Jan, a high on the week of the 15th of Feb, and a high on the week of the 8th of March. And this is opposed by the lower highs of the same, but in the RSI we have a high, a lower high, as opposed to a high, higher high, and higher high in price. So generally momentum dying off, sign that the market is potentially ready for a deeper or more significant sell-off in the longer term. This is the week chart we're looking at after all. So let's come down and have a look at the day chart. Now the day chart, we are currently trading below the 10. The 20, the 10 and the 20 exponential moving averages above the 60, above the 250, in the neutral zone between 40 and 60 on the RSI. Some darker red bars on the histogram here after having the short-term moving average cross over the long-term moving average. We can see divergence supported here in both the RSI between these two highs and these two highs in price, plus the same bearish divergence in momentum on the MACD between these highs, high and lower high, and high and higher high in price. So once again, a sign of weakening momentum. So now let's bring up our Elliott wave count, and I'm going to present this count first, nice and simple one, which is the idea that we've completed a wave 4 correction. Now this could be intermediate degree, but I've got it as primary degree here, so that's what I'm sticking with until proven otherwise. So we're going to just come down to the 1 hour, and we're going to alter the chart and have a quick look at this. So this count suggests that the 3 wave move we saw here was the completed correction, a WXY, a zigzag into a triple combo into a zigzag for our Y wave here. Alright, and then we were looking at 5 waves into a 1, pull back into a 2, 5 waves on a minute time frame into a -3. This was found at exactly the 1.618 extension of the wave 1, which does support the bullish count. That's the perfect target for a wave 3. We have since topped, if we switch out of log into arithmetic scale, since we're not looking at the long-term chart now, we're looking at closer price action. And on the arithmetic scale, we can see we come straight to the 1.618 extension of the 1 for the 3, which is a nice target for the wave 3. The problem I have from this point, because I liked the look of this a week ago, but since then we've done we've come down in what looks like 5 waves, come back up in what looks like 3, and we've set a lower high and then started moving down again. You could say, well, maybe it's just a 3-way structure, Tommy. Well, maybe, but then we've got the cut-off point, what we call the minor wave 4 invalidation point here at 52698 spot 19. If we come down any lower, we're going to invalidate the top of this 1, and then I can't really support this bullish count from that point. So because we've got a 5-wave structure here in the 1, okay, we've got a 5-wave structure here in the 3. So even though we might be in the 5th of the 5th, I'm not calling an ending diagonal here. I'm calling an impulse wave, so I can't allow an overlap of the wave 1. Not with the way I've structured this. So any invalidation of that wave 1 top back here, that's enough for me to call bullshit on this. Okay, so you can see how we've gotten very close to doing that. And if I could see 3 waves here, I'd be like, yeah, 3, 3, 3. It's a flat pattern. We haven't invalidated yet. Maybe there's still strong support for the bullish argument. But all we have to do now that I've seen that 5-wave move down, all we have to do is take out the top of this wave 1, and I'm not going to support this bullish count for the moment, well, any more from this point. So that's it. Keep your eye on 5-2. I mean, I've got it here as 52698 spot 19. That will make it certain. If we take out that high of that wave 1, we've invalidated this bullish count, and this is not a 1, 2, 3, 4. But the fact that we've come directly to this fib target of the 123%, 123.6, the length of our, what we're saying is our 4th wave here, we came straight to it here and then started selling off. That is the perfect place to find a wave B in an expanding flat. That's what we're going to go and look at now, which is the more bearish count that we're still in a correction. So let's move over to our hourly chart, or to it, full screen it, so we can get a look of the exact same thing, different count. Now this is the count that I'm now leaning into. I know I've changed my mind since last week, but price data has insisted that I do to some degree, and you know, an open mind is a mind that can change. And I now see the relationship here between what I think is an A wave into a B wave into 5 waves down into a C. Is what I'm expecting. So we came straight to this target at 62.054 spot 39, which is 123.6%, an extension of A. Here it is, 123.6, this blue line. That's the perfect place to find a B. So I'm happy with that. Now the next place to find the C will be, if we're doing an expanding flat, it could be just beyond where the A finishes, but I've got it targeting the 161.8. Now I'm going to explain why. Let's first thing I want to do is show you the parity here, or show you the relationship here. From the A coming up to our proposed B, we find our C at 161.8, which is 37.166.84. That's where I put the C. Now it doesn't have to come this far, but the thing I like about this is we've gone to target with the B, straight to the target with B. And we're also, if we come down that far in the C, we'll be hitting the 38.2% retracement of wave 3 for a wave 4, which is the exact perfect place to find a wave 4. So you've got 161.8 extension of the A from the B, coinciding with a 38.2% retracement of the 3. That's pretty strong confluence, that is. I mean, it's not a crystal ball. Nothing is. We're dealing with probabilities after all here, but it's pretty neat, if I do say so myself. So let's just to be sure, because I think I've taken that fib off, let's come all the way back to our 2, and we're just going to throw a fib up from here, and we're just going to zoom in to make sure we get it in the right place, and we'll even put a magnet on the thing. Okay, so from here, magnet off so we can move the chart, and we're going to drag this thing all the way up to our wave 3 high, not the current high, but our proposed wave 3 high, because we're dealing with that expanding pattern. So we don't pick the most recent high, we pick the high at where we are suggesting, or where we are theorizing, the correction began, and that's where we're going to go. So we are going to lock that in place, keep that on the chart, zoom out, and then we can see I've already labelled it. Here's the 38.2%. Here's the green line, which is the 38.2% retracement of the wave 3, and we can see, as I've already done it, let's just do it again, just to be clear. Let's take our wave A extension and extend it from our B and you can see we come straight 1.618, this purple line, ever so slightly beyond it brings us to a 38.2% retracement. There isn't much else to go on because we've been up in thin air for quite a while. There is some volume down here in the volume profile. There's a bit of a gap here which we could fall through quite quickly if we were on the way down, but there's evidence to suggest that we can start finding support down here. So let's just hide some of these at the moment. I've got them now saved in my object tree, so I can just hide them out the way to get rid of all the mess on the chart. So yeah, I'm leaning into this being a more broader correction now, but I could be wrong, and we're going to know pretty easily. So let's just pick out our two targets. Let's remind ourselves, wave 1, wave 4 invalidation of minor wave 1 is at 52,698 spot 19. That's when we can turn away from this bullish count and say this is not an impulse wave off of a low. Right, the next target is simple, it's the previous high. So let's just be absolutely precise and put in a little ray up here with a magnet on it on the previous high. Nice clear white line. Zoom out, tells us on the side of the chart what we're looking at. 61781 spot 83. So that's it. If we avoid invalidating this proposed wave 1 in the other count, which is 1, turn that bloody magnet off, 1, 2, 3, 4, we come down to here, and we're bouncing already, we're coming up, so maybe, you never know, it could be right. If we don't invalidate this wave 1, this is still legitimately possibly a wave 4, all we've got to see then is a move above this high. Okay, and then we're going to look for a fifth wave, and then at this point it will either be the fifth of a fifth of a fifth, which on intermediate time degree I don't think is likely. I've got this counting into a wave 1 on intermediate because I've got 5 waves in minor here, so I'd be suggesting a wave 1. Then you would see a wave 2 pullback, which of course can invalidate this point at that point, because it can retrace anything up to 90% of this initial move up. That would be a wave 1 into a wave 2, then a giant wave 3 in intermediate time frame, then a wave 4 intermediate time frame, and then finally wave 5 intermediate time wave into primary wave 5 into cycle wave 3, then big style correction. No, sorry, into primary wave 5 into cycle wave 1 is how I'm counting it. Sorry, excuse me. And then a massive wave 2 correction, probably mid to late summer, which would give us an opportunity to buy Bitcoin. Whatever high we reach could be huge, but whatever high we reach, if that plays out, that could give us a 50 to 60% discount on wherever we get in that wave 5 in the subsequent months, and a big correction to a wave 2, which could take a long time. So that's if this count works out. Either way, in the short, that's the long-term count. I don't put that on the chart. It's all theoretical. In the short term, I think we're in a broader correction. I know I've changed my mind again, and I'm looking for 5 waves down in the C to the 1.618 extension of the A from the C to coincide with a 38.2% retracement for wave 3. That's what I'm looking for now. The 3 would probably be down here, and the 4 would probably be like this, and the 5 would probably be over here. But either way, something like that. That's easily going to be proven wrong if we turn around, take out a new high. And that's it, guys. So, if you're new to the channel and you've liked what you've seen, please subscribe, smash the like button, let us know what you think in the comment section below. If you want to, please feel free to share any of these videos, and make sure you hit the bell notification icon to stay informed of future video releases. Take care, guys, and that's our video for today. All the best. Bye-bye.